Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a continuation of the strong buying that we saw yesterday, and ES ended up hitting the 2069 area. At this point, heading into the open, we have pre-market support at 61.5 to 63.5. This is the aggressive area of support, and holding above it tells us that the buy side is in firm control. But even if we get a pullback into 56.75 to 58.75, or even a little bit lower, it wouldn't really change the short-term bias. The buyers can still maintain control. So the expectation is for buyers to be active on pullbacks into the support areas. We're seeing so far even some buying at the most aggressive area, which is 61.5 to 63.5. On the upside, we have resistance at 69 to 71.5, which marks the recent major swing high from early April. And that is resistance until broken, but a breakout above that zone on strong momentum and the other markets participating can take us to the next zone at 78 to 80 half. And at that point, we really have to assess the environment in real time to determine whether the market is short-term exhausted or whether it's turning out to be more of a trending type move, in which case we can just pause and even go higher. So right now, the market is testing larger time frame resistance, and we've seen some selling come into the market. So understand that we are trading near some bigger areas of resistance here, and as we push higher, especially into 86 to 88, we're going to be testing yet another larger time frame area of resistance where sellers can be active. So the challenge is going to be to spot a good enough long entry off the open where the risk reward is still fairly decent. And in order to take a long at these higher prices, the underlying environment really has to support the idea of a breakout above 69 to 71 half. And as long as we are seeing, that underlying strength, as long as we're seeing that sustained upside momentum, even a aggressive zone can work, like the 61 half to 63 half. But below that, 56.75, 58.75 provides better trade location. And in the event that we get a deeper pullback, 49 to 52 is another very good spot where buyers can defend and be active. And ideally, you want to see the market hold 49 to 52. If this balanced breakout that we saw yesterday and overnight is going to remain intact, then you don't really want to see a very deep pullback. So, the ideal scenario for buyers would be that they hold it above the initial support zone, or above at least, the prior gap, the previous close, and the VPOC. But the extreme would be 49.52. And if that area doesn't hold, in that case, it puts the entire breakout idea into question, and it can actually change the short-term control. So ideally, you want to see it holding above initial support, and that is a good spot to attempt a long, expecting a move at least up to the initial resistance area, and possibly looking for a breakout to new highs into 78 to 80 half, and depending on how much volume and momentum we're seeing, potentially 86 to 88. But the higher odds objective above initial resistance would be the first zone, 78 to 80 half, and responsive sellers can technically still be active there on first test. So our short-term bias heading into the open is bullish, but with the caveat that we are trading near larger time frame resistance, so we need to see some underlying momentum in order to take a trade at an aggressive price, a breakout type trade. But if we get a pullback into initial support, that's a good spot to attempt a long. Same for the previous VPOC and close, and the 49.52 is kind of the final spot that you want to see hold, and that's at a potential area where the market could reverse and go back up. So buyers in control will focus more on long setups, be more cautious on the short side since it's counter to the bias. Let's see if the buyers can really maintain this control now, and we'll take it from there.